Good morning, trading world. It is January 28th, 2022, and this is my pre-market outlook and technical analysis for, day trading the SPY. Now, yesterday I came in screaming, "Don't trust the bounce." Or, as I said in the title, don't believe the hype. Now, coming into today, I know there were key earnings. And usually when conditions get as such as they are, when it's as volatile as it is, I don't really pay a whole lot of attention to single issues. And I'll show you why. It's just one of those things, the basket or the group is stronger than the one. So the question for today, will Apple be enough to pull tech up, or will the rest of tech pull Apple down? Let's take a look. You should know by now, Apple killed its earnings numbers and took off like a rocket after hours. And actually, let me see if I can bring a chart of Apple up. All right. At earnings after hours yesterday, we can all see where Apple took off like a rocket. A lot of people, a lot of fund managers have been using Apple almost like a bun. It's like a safe haven right now for a lot of money. But maybe for a brief moment, you will see a run, but you can't hide moment today. Just to explain that, excuse me. Just to explain that run, but you can't hide, is that a lot of money is hiding in Apple, trying to duck out from this crazy market. And I wish I could bring this up. I'm going to go through my watch list right now. I'm looking at Google. Google is set based on the bid ask. It's set to open lower. Amazon is set to open lower. Microsoft is set to open lower. Nvidia is set to open lower. Tesla is set to open lower. Facebook is set to open lower. These are all the big names in tech. If they all start to fall today and continue, because the stage is already set where they will open lower, and if they begin or continue to sell off at any level today, they are going to come for Apple, and Apple is not going to be left out. Apple will be sold into as well. And that could end up with Apple ending up at some point today around 155. Now, I took some positions yesterday on the SPY. I bought some 28 Jan 22 440 puts. But instead of closing out the puts yesterday, I decided to roll the puts down, some to the 434 and some to 432. Same expiry or expiration. And the reason this was done is I took these positions based on the 4-hour chart. And let me bring that back up on the SPY. I took those positions based on the 4-hour chart, and yesterday the 4-hour had not finished its cycle by the time we came, or before close. So that was all the more reason for me to continue to ride the wave down. So instead of closing those positions out, I rolled them down just so that I can take some money off the table just in case there was some type of rally. But I wanted to make sure coming into this morning that I was deeply rooted in short positions to take advantage of a flash down. Excuse me. Now, let's see here. I'll get into this 4-hour chart. Since Monday, I had noticed that on the 4-hour, we were building a triangle. And everyone should understand what happens in a triangle. Is you know, we're going to get an explosive move one way or another out, you know, as things tighten up as we get closer to the apex of the triangle. And my thinking was, if we break the bottom of the triangle, we could spill pretty good overnight and early into today's session. That triangle break would take us right to the bottom of the current channel that we're in at this 425. So as you can see, I have the triangle kind of drawn out here. And this is the channel that we're currently in. And on Monday, we had already taken dipped a toe into the next channel lower. And even I think yesterday or maybe a couple times this week, I mentioned to take note of the 422 level. Remember it because we have unfinished business there. We could revisit it at some point in the week. And that some point seems to be today. So today will be key to see how the flush impacts the weekly time frame. If we get to oversold territory, it could set up a great relief rally next week. If not, the onslaught may continue into next week. Let's get into the key levels for today. All right, and here we have the key levels for today, starting with support. The Jack support level is going to be 426 to 425. The Queen support level is going to be 416 to 415. And the King support is going to be 406 to 397. I just want to make mention as we get down here, especially on a day like today, because we have a options expiration day, along with what looks to be a flush out. When those two things come together, and we have the potential to do this on the bottom side of the market maker's expected move, things can get really crazy. We're already in a volatile state. So, as I've been saying, when we get, especially that we're in this backwardation, the levels get very, very unclear, and we have to lean more and more on the feel of what's going on at the moment. Now, back to our resistance levels. Our Jack resistance is going to be 431 through 432. Queen resistance is going to be 433 through 434 area, and King resistance is going to be 436 through 441 area. If we break away on the lower side of 422 it could get really crazy today. The next channel below the channel that we're currently in is going to be 425 down to 416. Let me bring up the scenarios for today. Alright, our first scenario is going to be the rounded reversal day type. We could get a continued takeoff toward the queen or king support area and find midday chop around either of those levels, the queen or the king support area. And before and around the or after the midday chop area, we could open up the second half of the day and spend that same energy that we spent coming down going up. Now, the crazy part about today is that we could have a serious relief rally that takes place the second half of today or at some point today. And I mean, it could be big. But regardless of how big that relief rally is, I'll be looking to see what kind of impact it had on the weekly time frame. Regardless if we have this rally or not, if the weekly time frame still has not dipped into oversold territory, it is highly likely that I will re-up and come into some shorts at the end of the day, being prepared for Monday if we haven't hit oversold territory on the weekly. That's the more probable cause or scenario for today. If I do those puts, it'll be something that I can afford to lose. I'm not going to spend a lot doing that. But if we are into oversold territory, it could be the beginning of a huge, huge relief rally. So, we'll see what happens when we get to this flush out and how critical it is, because at the bottom of this flush out today, if it's bad enough, I may elect to sell some bull put spreads down here in preparation for a relief rally. Now, let's get to the next scenario. All right, the next probable scenario is going to be the trend day down. And that's, we open up, gap down, and I have this blue line here, it's kind of hidden, but this blue line represents the previous close from yesterday, and we would come back, and on the way to that, we should find resistance. And once we find resistance, we may get a little chop sideways, but the main thing is that we're going to reverse and get into a serious downtrend for the morning. And that could take us all the way near the below the queen and maybe to the king support area. And hopefully we reach there and things kind of cool down and we get our midday chop as usual, and we open up the second half of the day with another down move, looking like we're going to continue to trend down, but at some point we're going to reverse and kind of have a small relief rally into the close. this is the day that I really like. I prefer those, because if we get the rounded reversal days, that day often doesn't give you a chance to set up position. It just the gates open, bells ring, and we're off to the races. There's no moment to gather your thoughts to figure out what we're doing. So I much prefer these trend days. It's one of my favorite days to trade, or day types to trade. That's it for that scenario, and let's bring up the last. Alright, the last scenario could be an expansive range day type structure. Always to keep in mind that whenever we're dealing with a range day, there are so many different variations that it could take. But we could look to set a decision area or lower boundary somewhere around the jack or queen support area before chopping higher, and then trying for another push lower. And we could get some chop back and fill before trying to get a relief rally at the end of the day on the expansive range day. And with these range days, you get a lot of convergence with your indicator, so you can kind of pay attention to your indicators, because price action and your indicators should pretty much be moving the same way. One thing that we should keep in mind is that we could have different variations to this, where we definitely take off to the upside, chop, and then come down. There's so many different ways that a range day can go, but this is what I'll be preparing for. In these conditions, it is of the utmost importance that whatever positions you take, always know and define your risk, because in this trading, the most important thing to you is your capital, and so that is what you want to protect at all costs, because if you lose it, there's no more trading. So that's why you always want to consider the risk in each trade that you take. You never want one trade to have an impact of you not being able to trade, the next day or at some point in time in the future. So that's why it is also important to always know the risk of each position, and profit will come. As always, wishing you a successful trading day. Hope this helps. Have a great one.